Good morning from Chicago traders. It is 8 a.m. Chicago time on Thursday, the 16th of September, 2021. It is a day before quad witching. This is episode number 2074. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to jump right into the pre-market summary sheet here. If I can get it up and running on this particular screen, here we go. Hopefully the audio is good. This morning on the static screen here, we see a mixed message, slightly tinging to the risk on side because of Europe, but overall, U.S. markets just holding sideways, holding steady, not really moving away from the prior day settlement. The S&P down 6 basis points. The Dow Jones is up 30 points. If you look just to the right, you'll see that Dow Jones, one rotation is 36 points. So really pretty much unchanged. The S&P 4.75 points is one rotation, using the last 20 sessions 1 minute data to calculate the harmonic rotation there. The Russell up 2 basis points or a half a point. And then the Euro stocks and the DAX are up strong, leaning on travel stocks. Ryanair came out with upbeat projections in terms of travelers, and there was a big sympathy push as a result of that. The metals are getting whacked. Gold down 1.8%. Silver's off 3%, and copper's off 2%. Copper's been all over the place. Copper is an interesting commodity as it generally foretells what the growth picture looks like. Manufacturers buy copper ahead of time, and it impacts copper prices. It's one of the input prices, along with steel, aluminum, lumber, and many others that are really causing inflation. So it's important to watch these metals. There's a headline that China is selling copper, aluminum, and zinc from its reserves, and we see that whole sector is kind of being pushed down. The 10-year note and the 30-year bond are off. The bonds are off 20 ticks. The 10-year notes off 9.5 big ticks. The Bund's off 32 euro cents. The crypto's been climbing up. You could see that Ether has moved its way all the way from around 2,800 to 3,600. It paused between 3,200 and 3,400 for a while and has been climbing. As far as earnings, none are in play, nothing major. The headlines are, again, the persistent surge in China COVID cases, which is expected to bring on tough control measures by the Chinese Communist Party. Also, property meaning real estate, casino and bank stocks are shaky in China and have been getting hit. The Asian session has been weak now for several sessions. Again, China's selling metals, some key industrial metals, and the U.S. budget is in a bit of an inter-party, or I should say intra-party complication. There are some votes, and it's been tough to get this passed, as many Democrats are against the budget created by Democrats for various reasons. So that U.S. budget has quite a few implications on taxation, on spending. It helps certain groups. It impacts others, through taxes and so on. So the market's got to figure out where that stands. We're coming into the part of the year where we start to talk about the debt ceiling. That's coming into play. Anyway, there's a lot of kind of overhead, political macro overhead coming into the busy season, the busy trading season that we're in now. In terms of what's expected for today, business inventories this morning, we did get a key number. Retail sales month on month came in at plus 0.7, was expected at minus 0.8. Pretty big swing there. Caused a small sweep down, and then the market pushed back up. It was a surprise on the positive side there. We see the S&P now recovering. Initial claims came in at 332,000. Consensus was 330,000, so pretty much in line. And then at 10 a.m. we have business inventories expected at 0.5% for July. And we have a couple of numbers, tick flows and capital flows at 4 p.m. at the close. This is where we stand today. We don't have a heavy calendar, and we're going into quad witching Friday tomorrow. Some of the expirations occur at 9:30 a.m. Eastern at the open, and others occur on the close. But throughout the day, we will see hedging into the close tomorrow and assignment over the weekend for those options that are in the money and so on. And of course, those have to be hedged by the selling party. So that may still have an impact on how things trade. However, for an expiration week, we've had some really unusual movement, and we have had some pretty decent action. The S&P, down to the S&P now. The S&P is in a balanced posture coming in with a point of control at 44.69. 44.69. The VWAP and mid are at 44.68 or so, and 44.68 quarter, 44.67 quarter. So we have a market that is completely imbalanced, just like we saw yesterday. The S&P pushed down into that 56 just now, putting in a low of the session of 56. If you recall, the 56 has been in play all week. And above there, it's 65, which is just beneath this overnight point of control. One thing I commented on in the Convergent Trading Head Trader channel last night as I was posting the updates on the levels that I'm using is that we have a ton of structure above. We'll look at that a little bit today. I'm going to do my best to not make this a really long trader bite so you can move on with your day, but there's a ton of structure. I mean, very clear support and resistance levels formed through low volume nodes, high volume nodes, and these create really decent risk reward areas, in my opinion, coming into the rally or the recovery from our dip into 44.2750 in a December contract. So we're doing this on expiration week, which is interesting. So it's something to pay attention to. The overnight inventory has been mostly below yesterday's settlement. So the inventory is 64% short, and currently, because this is a static image in front of you, or static sheet in front of you, currently the S&P has 186,000 contracts in it, which is relatively elevated, but it makes sense because we're in expiration and volumes are going to continue to be elevated versus the norm. Yesterday, because of the way this thing drove down and consolidated without taking out the 50% or the mid of the prior session, without challenging the point of control the prior session, the expectation is an open auction, choppy open that attempts to push higher, and I was looking for it to push 20 to squeeze the prior day's low and to go into balance to give us the base is what we would expect. This would give us a base from which we can push higher, pull back, and then start to squeeze higher as we've seen. This is the normal structure of a reversal, a rounded reversal up or a rounded reversal down. What we've been doing, however, is a drop and a V bottom reversal. We've seen a lot of that. I'm sure a lot of you have seen a lot of that since about 2018. It's been that way. But yesterday, this scenario didn't really work out. What worked out was scenario 2, a push into 56, a squeeze down and then a push into 56, and a push higher, to challenge the 65 and then potentially the prior day's high to reverse the one time framing. Here's our review segment. This is what we saw yesterday. We open up, push to 43.50, and then have one of those drops just like we saw the day before, just like we saw on Tuesday morning. We have a drop that gets us close to this relatively weak bottom. We have a pretty weak bottom from the prior session at 25.25. It went to 25.25, and then it went to 25.75. Relatively weak bottom. So the idea here is to see if we can get a pullback that pushes the bottom, that gets us into 20, and then look for the bounce for scenario 1. That's what was expected. However, we got this, a 20-point rotation up from the prior low. And so this zipper structure that basically makes up the last hour trading on Tuesday afternoon provided support to longs, and then it ended up pushing back up through the opening swing, pulling back to the open, consolidating, and then creating this one tick test of the prior high at 47.50 before it dropped through to the OS low and breaking through this mess of stuff here. The open, full session VWAP, full session mid, RTH VWAP, RTH mid, just a cluster of levels there, only to push to the other side of the opening swing and then consolidate in the middle. This is just classic expiration week shenanigans. That's what that is. We have an impulse that only continues by a tick, and then we end up consolidating for a period of time. And then what do? We take out the high, the prior high, by another tick. This is showing consistent weakness. We're getting weak highs, so we expect the market to continue higher, but then when it does, it only takes it out by a tick right there, and then falls into the middle. So unless you saw that the pullback was quite poor with a higher low, and then you saw this tiny little consolidation here to get long, the next opportunity to get long right there, it was really hard to catch this move back up to 44.65. So you could see 44.65 right in here. See that? Resistance, breaks through, pushes to 73, pulls back for support, and then continues on to the prior day's high, which was at 77.25. And again, it takes out the high by two ticks before it rests at the top. So we ended up yesterday with two very distinct distributions with a low volume zone in between. And so the idea here is that if we fall below that 44.60, we would expect this thing to drop into 56, which I didn't expect this morning to be support. It ended up being the low of the overnight session, the 56, the old 56. If I turn these stock zones on, you'll see there's a stock zone at the 56, and this is basically the low of the overnight session. And it's been there for several days now, that 56. I've talked about it quite a bit. Now it's the 65. So the break below the 60 is expected to run down into 51, 52, and 50 right here. So it poked through the 60, went to 56, and we have bounced, and we are back at 66 and a half currently. We're back here consolidating against the 65. So this is what I mean by there's just a ton of structure to lean against. These are, and it makes for, in my opinion, really good trading because we can identify clear risk reward areas. For example, the 52.51 has a clear structure down into 49.50. Below there, you know you're wrong, and it starts to move into the high volume node, which brings you into yesterday's point of control down at 45. And so, you bail out in the 48.50 area with a long in the 51.52, potentially scale in area. And then what do you look for? You look for 60. So we're risking in that situation, we're risking somewhere between 3.5, 4 points and looking for a rotation of about 8 points, which gives us the risk, the R factor that we need to remain profitable in the long run, right? So this kind of structure here exists on a higher time frame as well. I won't get into that now. This is starting to sound like a study hall. But as the market pushed higher yesterday, the delta was pushing lower. Delta should be in line now that the roll is completely done. Complete, but I'm not going to trust what Delta is saying until expiration is done, until tomorrow. Tomorrow is over. Here's what's happened since. So this is yesterday right here. The gray is RTH, and then the full block, the orange profiles are the full session, the full Globex session. Here's the current Globex session. We have a balanced profile. We are trading right up against the overnight point of control, VWAP and mid for the full session, which we're attacking from above, are now in line with where we are. So just like yesterday, we are opening. Yesterday we opened down here and we had a point of control down here until the last minute it shifted up, or yeah, we did have a point of control down here. So we ended up with a market that is opening on top of the overnight point of control, on top of the full session mid, full session VWAP. And so the expectation is, as you saw, is chop, chop, chop on the open, which didn't happen. It ended up pushing up and pushing down. We expect chop, chop, chop as we come into the day session, and generally that creates a zipper for a period of time, the first 10 minutes or so, and then we have a commitment, and then that commitment basically dictates which direction we're trading from, and then we zoom into a tick chart or our footprint to find little consolidations to get long. This is how we see the tiny little zipper consolidations that we can use to take breakout trades in the direction of the overall trend that we're trading. So what we've done here is we've put in lower highs and lower lows, except yesterday we put in a higher low and a very slight higher high to the prior session. We did not quite get range extension up. It puts us in limbo for today. Basically, it looks like the one-time framing down has ended and we may go into a neutral. The expectation is we would go into a neutral environment and then we start to work ourselves through everything above 44.82. Something I want to note for you to note here, or I should say bring to your attention, let's take a look at the structure that is above us. Look at this here, right here. Okay, this area, this 81.82 area is your major immediate resistance above. This is, we expect a reaction up here in this area. So we expect a fight. So the first run into 80 to 82 is going to be a short for me. The other area that presents the same kind of opportunity is the 45.01 and the 44.99 area right down here. That box is too big. Right down here. Unfortunately, it's against the century figure at 4,500, but this is another area I expect a pullback of at least 2 rotations, which means 9 to 10 points. Same here. So pay attention to those below us. We're looking at, again, unfortunately, we're opening right on top of the 65, which is a key area up here. 65, and then 56, a key area down here, and then 50, a key area down here. So there's a lot of structure above and below, and if you look at the intraday chart, you'll see, hang on, let's zoom out. You'll see that there's quite a bit of structure to work with in what I just showed in terms of how things play out up here, how things play out down here. We see a lot of tests go up, come back, retest, fall through, come back, pull back to that area, fall lower, fall lower, fall lower, coming up. I would expect some structure again at 56 to 51. Expect to pull back, consolidate in this new high volume node area that we have formed. You could see it right in the composite, and then we expect to push to 81, pull back, take the 81, pull back, push to 4,500, pull back, consolidate, push to 4,500, pull back, and then start working itself up into these levels up here at 4,520, push to 4,520, pull back, consolidate. If it takes out the 4,520, 4,520 becomes support, is expected to become support into 38 and new all-time highs, right? So what I'm telling you is we're coming into the busy part of the year, and or this part of the year that is quite active with really good structure to define risk reward. This is a period where you want to exercise discipline, be clear about your plans and setups. Anyway, let's move on to what's expected for today, because this is getting long in the tooth, but there's a lot to digest here, and I want to make sure that you're taking that away with you today as part of your plan. So let's take a look here. I'm basically going to redraw what I just said because it comes into play. So the key areas that we're dealing with here are 77 right there. We're dealing with 82, 81 right here, 82, 81 above, and if we break through, then we're dealing with 45.01 down into 44.99. So 99 to 01. These are all important structures above. Below, the important structure that we're dealing with is 56. Unfortunately, the 65 is in the mud here, where we're balancing on top of 65, so that's likely to cancel that out. And then below that, 50. And once we clear the 50, we are good to go to 38 for the next area. So what does this look like? We're opening on top, we're opening in range, and we're opening in the upper distribution of yesterday. The expectation is a pullback, a drop towards the through the 60 and into the low volume node. If we get support back into the open and into the overnight point of control, then the expectation is to push 77 into 82, 81, balance, come back, and then potentially re-challenge that 82, 81 and rest up here. This is the expectation, the reversal that started yesterday. There's a lot of overhead, not only in the micro sense within the structure itself, but also macro. So I expect it to struggle on the way up more than we've seen in the past. The secondary open auction that pushes immediately into yesterday's high tries to squeeze the 80, and this is the better trade here. Look for short against the 80. consolidate, push back to the open around the 67, 68 area, giving us great risk reward, and then move back into 56.50 before it consolidates. So we end up with a higher high, higher low in either scenario, reversing the one-time framing down. I covered a lot here in this session. It's been 25 minutes. I know that's a lot to digest, but just understand that there's some what I perceive to be pretty decent opportunities, despite the fact that we are in rollover, expiration, and quad witching tomorrow. Mind your risk, and I'll catch you tomorrow morning. Take care. Hey, and don't forget to register for today's webinar. I'm hosting Jeff Snyder today. Go to you can register even if you cannot attend, so you can get the recording. Go the number 2ct.pro/Jeff-Snyder lowercase. And that'll get you registered. The event will take place midday. We're going to talk inflation, we're going to talk taper, and get a better macro picture, so we're not completely immersed in our short time frame as day traders. We're getting someone who is an expert in the industry to give us a look on the inside or behind the curtains. Good luck.